Your market news now. Asian emerging market currencies and equities climbed higher after the Federal Reserve indicated it would maintain a dovish tilt. Markets in Japan and mainland China are closed. Traders are looking ahead to the U.S. non-farm payrolls data later in the day. Meanwhile, oil edged higher on the prospect of OPEC Plus continuing output cuts. Gold prices were poised for a second straight of weekly declines, although gold held nearly steady as investors remained cautious ahead of the U.S. non-farm payrolls data. To give us more perspective on the markets, we are joined by Verv Govender, who's a portfolio manager at Rand Swiss. Verv, thank you so much for your time. As we wrap up the week and you look at your screen right now, what's driving markets?
As you mentioned, I think the markets are a bit nervous about what's been happening with regards to the interest rate picture out there. We've seen a number of different, indicators coming out showing a very strong U.S. economy. We're showing a rather powerful, job market in the U.S. at the moment, and I think that's kind of, making people a bit nervous about, more rate cuts for the rest of the year from the U.S. at least, or at least rate cuts from the U.S. for the rest of the year. I think right now we're down to one cut after September. At the same time, we're seeing European numbers coming through over the last week or so that's been a bit more amenable. We've seen, for instance, a rise in unemployment in, for instance, Germany, showing that the European economy is a bit weaker, and that I think might just give us a little bit of differential, in terms of markets. Right now, it's been a reasonably okay day, and I think that, once we have the confirmation of the U.S. jobless numbers or the unemployment numbers, we'll have a clearer idea what the path forward is going to look like.
Let's go back to Fed Chair Jerome Powell's comments at that news conference. I mean, he's taken the idea that the market had around rate hikes off the table. And let's come back to that narrative that actually started rising with regards to some analysts pricing in perhaps even the possibility of a hike given the inflation. The whole idea of hikes, I mean, was it a fantasy of the market or was it a real concern given the stickiness of inflation?
Well, I mean, if you look at the fundamentals of the U.S. economy, so let's just think of it. The U.S. economy is growing faster than what you think would be the sustainable long-term average. It has an unemployment rate that is lower than what you would think would be the the sustainable long-term average for the U.S. economy. It's beyond full employment. You have inflation not just above the target level of 2%, but above the target level, showing indications of rising. So you have higher than sustainable growth, lower than sustainable unemployment, and inflation, higher than you want, and possibly rising. That is a scenario that you'd almost certainly say would cause a case for rate hikes. Only the fact that rates have gone up so much for the last little while, the market is now expecting a fall, is the reason that we're not having rate hikes on the table at the moment. I think that just objectively looking at what the economic situation in the US looks like, you would say there's a significant, cause for rate hikes in the US going forward.
Let's talk Anglo BHP for a moment. Over the past few days, we've seen so many articles in relation to that story, and Reuters running with an article that Glencore is said to be considering a bid for Anglo American. If you had to look at all of these developments, all of the articles and how it plans out from here, what would you say is the one big question you have as an analyst with regards to the Anglo BHP bid, etc.?
I think that right now the number that they're talking about is something like £30 or 700 rands. Both those little round numbers. I think £30 is almost 700 rands. So I think that is a significant jump up from here. We're talking about 10% or so from here as being a level that the deal might go through at. So we're talking, even beyond here, what the pricing looks like. So if you look at it from that point of view, the market isn't pricing, a guaranteed, go through this deal. Yes, the share price is currently above the, the bid price, but I do think that if it does go through, it'll probably be somewhere around about the 700 plus level than where it is right now. So yeah, I think that is the question: is it going to go up to that level or not in terms of the bid? The second question is, why exactly are they doing this? There's a couple of reasons you could say that BHP is looking at this. The copper, demand in the world is likely to rise with things like AI, robotics, and so on, becoming more of a factor in the next few years. Many people out there are saying data centers are already taking a significant chunk of global energy production. It's only going to rise, probably doubling in the next 3 or 4 years, which is obviously going to be a source of demand for copper. Also, is there a version, for instance, the Kumba and Anglo Plat, a version to iron ore and platinum, or South Africa as a whole? That's another question to be answered as well, I think.
As we've wrapped up US tech earnings, did they meet your expectations?
Yes, I mean, it was quite an interesting kind of tech number. I mean, you had some, I think almost counterintuitive moves. For instance, Tesla's numbers looked quite bad, but the market rallied strongly afterwards. Meta's numbers looked quite good. The market fell afterwards. We've had Apple's numbers that are looking reasonably good, paying more money, of course, back to shareholders. The one thing I think that we must look into these numbers is just what their future plans are. I mean, we talked about copper and AI and so on. I think there's also a factor coming through here. The reason Meta fell was because they're talking about spending a lot of money on AI going forward. Obviously Microsoft and what we've seen from, for instance, Alphabet as well, huge AI plans in the future, and Tesla as well. I mean, one of the reasons they've risen is because of the full self-driving deal that they've done with the Chinese, which is also AI related.
All right, Viv, unfortunately, we have run out of time. Thank you so much for joining us this afternoon. That is Viv Govender, who's a portfolio manager at Rand Swiss. We're going to take a quick break. When we come back, we'll have SME on point with Diabo Setu.